Good evening, everyone. I'd like to welcome you all to this webinar, and we will get started. I'd like to draw your attention to the screen, to disclaimer. What we're going to cover this evening. If you are new to trading or if you are a seasoned trader, the one thing that you need is a business plan. Just like any other business, trading requires a plan. It's always said, if you fail to plan, then you plan to fail. And so we're going to discuss the key elements, the essential elements that goes into building a successful trading enterprise. Okay, just a little bit about me. I'm Marcus Samuel Matilla. I've been trading equities, been trading Forex and currencies and options for the last 10 to 12 years of my life. And I have great experience that I'd like to share with you all tonight. So let's begin. What is a plan? Okay, a business plan, a trading business plan. A plan, quite simply, is a detailed method and formula that guides one to achieve something. So everyone is attracted to trading because of the possibility, because of the opportunity, because of the prospects of making profit, of making money. Okay, so the first thing that you want to have is an objective in mind. Okay, and the plan helps you define that objective. Okay. So what elements go into our plan? Anytime we're dealing with trading, it's important to have a stable and very even emotional balance. It's always said that the two emotions, greed and fear, rule the markets. And greed and fear sometimes cause people to fail, cause great traders to fail and lose profit. Okay. So the number one element, in my opinion, to any successful trading strategy is a mind management strategy. Okay. Dealing with analyzing what your goals, what your targets, and what your objectives are for your trading, it's important that you take into account your mental attitude, your mindset, the way that you feel when you win trades, when you lose trades. On the road to meeting your goals and objectives, it's important that you develop an emotional discipline checklist. Now, why is that important? I'll tell you why that's important. Because being wrong is part of being a trader, okay? As a trader, we are constantly taking educated guesses. We're analyzing the markets, trying to predict which direction the markets will move. And some of the times we get it right, hopefully more times than not, but we will get it wrong in some cases, okay? But the question is, how do you handle being wrong? Okay? If you're looking at trading as a long-term career, something that you're going to do to supplement your income, something you're going to do as a full-time, and you want to be successful in it, you have to be able to handle being wrong, because being wrong is a part of being a trader. You're going to lose. You're going to lose some trades, but you're also going to win. Okay, so the question, do you handle losing well? Do you handle it like this guy? Do you get angry, punch a hole through your computer screen? Okay, that is not the way to handle trading losses. Okay, I want to talk a little bit about Ray Dalio. Ray Dalio is one of the world's most successful hedge fund managers. In fact, his company, Bridgewater, was actually the world's largest hedge fund. Okay. And what I like about Ray Dalio is that it wasn't just about the profit. He ran his company according to principles, and he outlined his philosophy and the philosophy of his company and the culture of the company in a document called Principles. And you can Google that online, Ray Dalio Principles. There's some very good elements in that document that can help you in your trading. But this particular viewpoint, in trading, you have to be defensive and aggressive at the same time. If you're not aggressive, you're not going to make money. And if you're not defensive, you're not going to keep money. Okay, and that's very important. Okay, I have a student a very, very close student of mine. We've been working together since 2010. He first started out trading, and he was doing horrible. He had a horrible track record, but he stuck with it. He continued to grow and to learn, and at his own pace, according to his plan, he began to have some success. And today he's working for one of the top hedge funds in West Africa. But he started off trading his own account and losing very badly. But he stuck to his plan and then eventually panned out for him. So Ray Dalio says this. He says, I believe that anyone who has made money in trading has had to experience horrendous pain at some point in their trading career. Okay, and that's coming from quite arguably one of the world's foremost and top fund managers. Okay, and so we can heed that advice in our trading because having the right mindset is paramount. You can have a beautiful strategy, you can have a wonderfully funded account, and you could blow it all just by not having a good mental mind frame and an emotional discipline strategy. Okay, so what goes into a mind management strategy? Okay, first of all, as I said before, being wrong is part of being a trader. So let's take this hypothetical example. In this account, let's say you started off with an initial deposit of $5,000, and over a 3-month period of time, you were able to build it into a total net profit of almost $1,200. It's pretty good, okay? But along the way, guess what? You didn't win every trade. Taking a total of 62 trades, okay, you did lose at least 8% of your trades. And so it doesn't speak very well if you think you're going to win every trade of your professionalism as a trader, and it doesn't speak very well that you don't know how to handle this element of trading. Okay, so again, emotional discipline checklist. Every morning before I hit the markets, I have a checklist that I go through. Okay, the first starts off with me reviewing my previous day's performance. And after I review my previous day's performance, I then envision how I expect the day to go. Okay? And I take my emotions out of my trading and I stick to my plan and my strategy. And because I have good strategies, I understand that I will lose, but my strategies keep me in a favorable edge in the market. Okay? So again, mind management strategy is a key element to your business plan when you're trading. There's a lot of resources online that you can study. Okay, I'm actually the head instructor, head trainer at ITI, which is West Africa's #1 training institute for traders. And we have a whole course that we teach on the psychology of trading and how to manage your emotions in the heat of the battle. Okay. So we'll continue on with the presentation. Another element of a good trading business plan is a money management strategy. Now, what does that mean? It's basically a plan, okay, for lack of a better term, is how you choose to budget and allocate your trading resources. Let's look at it as you have a gun, okay? And in this gun, you have so many bullets, and you're trying to hit this target. How many bullets will you use to hit the target? Okay, will you empty your whole round, or will you just say, okay, I have 2 bullets for this target, 3 bullets for the next target? Okay, and when we talk about money management, we're talking about risk and our exposure to the markets. So here's another hypothetical example. Let's say you have a starting balance in your account of about $1,000. Okay, what you want to do is you want to set a daily loss limit. Some days the market will be very favorable. Some days it will not. Okay, the thing you want to ensure is that you live to trade another day and that your account does not get wiped out. And so you set a very disciplined and very conservative daily loss limit, and you stick to that loss limit. If at any point in the day that you hit that limit, then you're done trading for the day. And guess what? You get back in the battle the next day looking to hit what? Your profit target. Okay, so we have a floor and we have a ceiling. Our weekly goal may be a total of 30%, let's say $300. And along the way, we're only willing to risk $90 for that week. Okay. And so setting targets is good. And some people, they set profit targets, but where they fail oftentimes is to set loss limits, a point in which they actually stop. And so if you're going to be successful in the long term as a trader, this is something that you definitely have to take seriously. And I don't know how many of you are new to trading. I don't know how many of you are seasoned traders, but towards the end of the presentation, we'll open it up for some questions, and we'll get an idea for how you all view this particular approach to trading. Okay, so these are just some examples: starting balances and possible daily loss limits that you might set. Okay, remember what Ray Dalio said. He said, you can't be too safe and you can't be too risky. Okay, you can't try to play it too safe, and you don't want to be overly risky. So we're looking to achieve a balance, and so these are actually plans that we take the time to write. We create spreadsheets, we write in our trading journals. Okay, so this is the second element of a successful trading business plan. Okay, and the third, and probably the most focused on strategy of most new traders, is your actual trading strategy. Okay, and your trading strategy is simply what you use to give you an edge in the markets. Okay, and I'm not going to talk very much about specific strategies. Okay, that's part of what we study at ITI. We look for edges through indicators, through technical analysis, through fundamental analysis across different markets that will give us an edge to skew the market in our favor. Okay, so if we look at it, the markets can go up, they can go down, or they can go sideways. Okay, and using technical indicators, using fundamental analysis on the markets, specifically when dealing with currencies. Okay, fundamental analysis is very important. Okay, most traders, they don't take into account fundamental analysis. Okay, but fundamental analysis just is as important as technical analysis. And what I mean by fundamental analysis is knowing what's happening with a particular currency pair or a particular instrument that you're trading throughout the day. Okay, and every morning before I start my trading day, the first thing I do is I look at the fundamental announcements in the news that will come out that may affect a particular currency. Okay, and I'm mindful around the time when those announcements are coming out. Okay, and as far as technical indicators, there's so many technical indicators that you can use, and what you have to do is you have to find one that suits your trading style. Okay, and it depends on what time frame that you want to trade. Okay, the length of time that you want to stay in the markets, the particular volatility of the currency pair or the instrument that you're trading. Okay, and you want to backtest. You want to find good indicators that will give you a good edge in the markets. Okay, so again, I'm not going to get into details about technical indicators. We'll save that for some of the future webinars that we will do, but let's just suffice it to say that you need a good strategy to be successful in trading. And too often we focus just on a strategy, a particular indicator, okay, and we don't include these other elements that I've discussed before, okay? So again, my name is Samuel Matilla. I'm head trainer at ITI. ITI is one of West Africa's best and brightest Forex and currency trading schools. Some of our students have gone on to work for some hedge funds here in West Africa. Some are going on to be self-directed traders. And we love trading on the binary.com platform. Okay, so let's do a quick review before we open it up for questions. Okay, number one, to be successful in trading, you need a business plan, a detailed plan that tells you what to do, when to do it, and how to do it. Okay, and that includes how you discipline yourself, how you manage your emotions. Okay, That includes how you adjust your risk according to your desired risk exposure. How much risk do you want to take? I mean, it's always said that you should only trade with risk capital. Okay, don't trade with your rent money or your mortgage money or your car note money. Trade with risk capital. Okay, something that if you lose it, it won't put you in the poorhouse. Okay, but of course, we don't come into the markets to lose. And so we need a good strategy that puts us on the winning side of the market. And this is where our trading strategy comes in. So what happens when we meld all these elements together and we actually get started trading? Okay, what we do is at the end of the day, we have our, first of all, our pre-trade checklist. Okay, then we go about our trading day. And then we have our post-trade analysis. This is where we look at how we handled the day. Were we profitable? Okay, did we stick to our systems? Did we stick to our strategies? And we don't judge everything by profit. Because what I realize is that if you have a proven edge and a profitable system, over time you will be profitable. You may not be profitable in any particular trade or any particular day or even any particular week. But most of the times, if you have a good system and good strategy, you will be profitable for the month. And when you start to see yourself becoming less than profitable, then this is where the post-trade analysis is very important. Is where you begin to review your systems to see, okay, what's going wrong here? Okay, my strategy is not keeping me on the right side of the trades. I'm selling when I should be buying, and I'm buying when I should be selling. Okay, and so this is very, very important. Very important. This is what we do on our Sundays when the markets are closed. Okay, in our late night evenings, after we're done trading for the day, we review. How did our system perform? How was our entry? How was our exits? Did we leave money on the table? Or, were we right on point with executing our strategy? Did we get too emotionally involved? Did we enter a trade based on emotions, or did we stick to our strategy and our system? And so one thing I can assure you, if you have a good trading business model, you will be successful. Okay? And great traders like Ray Dalio have proven it. And some of my own students are very, very successful and testimonies to this process. So this is very important. And as traders, we are always improving. I like to say we are all apprentices in a trade that no one is a master. Why? Because in trading, we're always learning. There's always something new to learn. Okay? So again, I'll put my International Traders Institute information. You can contact me directly by email. In the meantime, I'll open up the floor for questions, okay? And if you have any questions, you can type them in and I will answer those questions. So I'm going to put my microphone on mute and wait to hear any questions that show up in the chat box, okay? If we have no questions, I'll come back in a minute or so and we'll conclude the session. But okay, I'm going to open up the floor for any questions. Type in your questions and I'll gladly answer them. Okay, no questions so far. So what I like to do is I like to encourage you all to keep listening and keep watching the binary.com webinars. My next webinar will be in June, okay? And I encourage you all to attend. It will be basically more in depth, talking more about strategies and systems and how to actually diversify your trades across time frames, okay? So I'd like to thank you all for attending. I'll leave my email on the screen for a few more minutes. And I would like to say have a great evening, have a great day, and I wish you all much success in your trading. This is Samuel Matilla signing off. Have a great evening.